Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A bearish black crow yesterday with a long tail on it. The whole action quite clearly showed the two bands of congestion within which this market is bouncing like a ping pong ball. The long tail yesterday was a dip down through the congestion zone from August 2014 between 101.55 to 103.35 and a rapid retraction back up, and the open and almost immediate decline showed the influence of the congestion area overhead from July 2014 between 106.75 and 108.65. We ended the session sitting just above the lower congestion zone. Looking now at the whole action of 2022, you could regard the late December 2021 to date action as a possible big M pattern. This pattern has not been triggered as yet, and yesterday's action made no difference whatsoever in either direction. So far today, a continued ping-ponging market with a test of the congestion zone below and a half-hearted attempt higher, stopped by all things by the declining short moving average, currently 105.89, before returning to just below unchanged and looking like an indecisive. Well, it could possibly look like an inverted hammer. We haven't seen one of those for a while here. Spot gold. A strong looking key reversal up yesterday after the market tested down to a new low not seen since March last year. What was interesting about the low was how little impact the August 2021 that is, low at 1684 had in slowing the decline, and how important it appeared was the March 2021 low at 1676. Till recently, they had been caught, the market had been caught between the two declining tines of the two separate pitchforks. Overhead, we had the middle tine currently at 1714 of the April to June bearish shift pitchfork, whilst below we had the lower tine currently 1690 of the March to April bearish shift pitchfork. As I repeatedly mentioned, I suspected the recent market was getting squeezed between these two tines from two different bearish shift pitchforks from two different time periods. Well, it looks like yesterday the toothpaste popped out of the tube. Not altogether unsurprising event considering. You see the prices had also pushed up over the middle tine as well as the lower tine, but they also closed over the middle tine, just under the next resistance, the September 2021 low at 1721. This now brings me again to something I've been talking about since last month. You see there is an argument for December 2021 today action being a possible really big head and shoulders pattern. We are past forming the second shoulder, had until yesterday looked like we were heading lower. If prices revert back down, and that turns out to be the case, then we have a primary target X below in the 1676 area, or where the interesting March 2021 low is, for harder to achieve secondary target in the 1560 area, well below the bottom of my daily chart. Now, you may be wondering, those seem a little small to be targets for this move down. Well, I can explain that. You see, I used the April high at 1998 in my calculation rather than the more extreme March high at 2070. I would rather err in caution and fail in excess. So far today, well, an interesting test down to the middle tine again, but using it as a base rather than testing it for a move up over the September 2021 low. The market is now in some fairly free territory, with only recent congestion in the 1738, 1742 area, and the declining short moving average just above at 1744 currently, before we reach the next key resistance, and that's the December 2021 low at 1754. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.